The stock market, once ruled by men in suits shouting across trading floors, is now ruled by machines. Silent, ruthless, lightning fast. Lines of code have replaced gut instinct. Algorithms have replaced emotion. And in a world where milliseconds mean millions, one mistake can bring the entire system to its knees. You're about to witness how artificial intelligence, built to make us rich, almost destroyed the markets it was designed to control. But before we dive in, let me say this. I'm not just a trader. I'm also an AI engineer. I've seen both sides of this world. The genius of what machines can do, and the chaos that happens when they go too far. So when I tell you that AI has changed trading forever, both for better and for worse, I'm speaking from experience. Before we begin, make sure to subscribe and join the movement. We're building the largest trading and finance channel on YouTube, where we uncover the truth behind money, markets, and the technology shaping them. Now, let's go back to the day when the machines first took control. For decades, the markets were powered by emotion, fear, greed, confidence, and panic. Traders made split-second decisions based on instinct. They weren't perfect, but at least they were human. Then came the rise of algorithms. In the early 2000s, Wall Street realized computers could do what humans couldn't: scan millions of prices, analyze hundreds of stocks, and execute trades in fractions of a second. That was the birth of algorithmic trading. It was precise, efficient, and emotionless. The perfect machine. By the late 2000s, nearly 70% of Wall Street was run by automated systems. But there was a problem. These machines didn't just trade with humans. They started trading against each other. And that's when things got dangerous. Let's go back to the day $1 trillion vanished. The 2010 flash crash. It was May 6, 2010. A calm Thursday afternoon, until the impossible happened. The Dow Jones plunged nearly 1,000 points in minutes. Over $1 trillion in market value vanished, then reappeared, almost instantly. Procter & Gamble, one of America's safest blue-chip stocks, dropped 37% in seconds. Accenture fell from $40 a share to 1 cent. No news, no disaster, just chaos. I still remember analyzing the post-mortem data. It was like watching a digital stampede. A single large sell order triggered a chain reaction of algorithms. Each bot tried to outsmart the next, selling faster, harder, and more aggressively. In milliseconds, the system overloaded. That's when regulators realized something terrifying. We no longer controlled the market. The code did. Now let's fast forward to August 1st, 2012. To the Knight Capital disaster. Knight Capital, a major Wall Street firm, deployed a new trading software. Everything looked fine. But deep inside the code, an old test function was accidentally reactivated. Within minutes, their systems began buying and selling stocks at random, moving billions of dollars uncontrollably. No one could stop it. In 45 minutes, Knight Capital lost $440 million. An empire, gone, before anyone even understood what happened. As an AI engineer, I can tell you, this is the nightmare we all fear. A single line of bad code, and millions, even billions, can evaporate. This wasn't a financial crash. It was a software crash. And it changed how Wall Street viewed automation forever. The rise of true AI trading. After that, the world became more cautious, but also more ambitious. Instead of simple, if this then that rules, traders turned to machine learning. AI systems didn't just follow orders, they learned. They studied past data, recognized patterns, and adapted in real time. They could analyze global news, tweets, and even satellite imagery of parking lots to predict company performance. Hedge funds like Renaissance Technologies, Citadel, and Two Sigma began spending billions training AIs that could make decisions faster and smarter than any human. And it worked. These funds began outperforming everyone. But here's the catch. Even the engineers, people like me, couldn't always explain why the AI made the decisions it did. We created something that could outthink us, but not something we could truly understand. That's when the fear crept in. Because a system you can't explain is a system you can't control. By the late 2000s, the market became a silent battlefield. Not of traders, but of algorithms. Bots were analyzing each other's behavior, anticipating moves, and reacting in milliseconds. It was an AI arms race. One bot would front-run another. Another would fake orders to confuse competitors. It was AI versus AI, locked in an endless feedback loop. Every millisecond, billions of dollars changed hands. Humans? We were spectators, watching machines gamble with the global economy. Now let's talk about AI disasters that actually happened. In 2017, a trading bot in Asia misinterprets fake news headlines scraped from social media. It triggers panic sells worth millions before anyone realizes the news was false. In 2020, an AI trained only on historical data begins shorting healthcare stocks during a global crisis. It couldn't comprehend the human element, hope, innovation, or recovery. In 2022, the crypto meltdowns. Algorithmic trading amplifies volatility in illiquid coins. Retail investors get crushed as automated systems spiral out of control. Each time, regulators patch the damage. But deep down, they know they're not in charge. The machines are. But let's be fair, AI isn't just destruction. It's also innovation. AI detects fraud faster than ever. It flags suspicious trades, predicts risks, and optimizes portfolios. It's helping retail traders access tools once reserved for billion-dollar hedge funds. It can process a decade of data in seconds and find opportunities we could never see. As an AI engineer, I've built models that made trading safer, faster, and more intelligent. The technology itself isn't evil. It's just a reflection of how we use it. But like any powerful tool, if it's left unchecked, it can cut both ways. Now the ethical question is, who is in control? Here's the question that keeps people like me up at night. If we no longer understand our own algorithms, who really runs the market? We built these systems to remove emotion, fear, greed, hesitation. But those emotions are what make markets human. Without them, we've built a machine that operates perfectly, yet without conscience. And that's what scares me. Because if AI ever begins to optimize purely for profit, without understanding consequence, then we're no longer investors. We're passengers. The future won't be humans versus AI. It'll be humans with AI. The best traders of tomorrow won't just read charts. They'll understand algorithms and their psychology. They'll use AI as a tool, not a crutch. Because even the smartest machine can't predict one thing: human behavior. Fear, hope, greed, panic. Those will always drive the market, not code. From the flash crash of 2010 to Knight Capital's $440 million loss, to the silent algorithmic wars happening today. We've seen what happens when technology moves faster than understanding. If you enjoyed this deep dive, make sure to subscribe and join our growing community, where we uncover the real stories behind the markets. Because at the end of the day, it's not about beating the machine. It's about understanding it before it understands you.